What's going on, guys? This is going to be a pretty big week for economic data. First off, I wanted to show you guys PCE. This is coming out tomorrow, and our readings lately have been just kind of bouncing around 2.5 and 2.6%. It would be a sigh of relief for the market to see this come in under 2.5% tomorrow. The market will definitely be keeping an eye on it. And I'll leave this down below for you guys, but it also goes over a bunch of other economic data coming out. It also talks about earnings coming up for some large caps. And we did have some economic data drop today. One thing we'll look at here in a second is consumer confidence for April. But I also want to point out that tomorrow is not just PCE, but also our GDP for the first quarter, consumer spending for March, personal income for March, pending home sales for March. And on May 1, Thursday, we're getting PMI for April, ISM manufacturing for April, auto sales for April. And then on Friday this week, we have got non-farm payrolls, unemployment rate for April. It is going to be a big week for economic data. Consumer confidence went down to its lowest level since May of 2020. It sank 7.9 points in April to a reading of 86, which was a larger decline than expected. The survey's expectations index, which basically gives people's outlook on the economy, dropped 12.5 points this month to 54.4, which is the lowest level in 13 years. And I'll leave this article down below for you guys, but it basically goes over what to expect for the Friday job report. And keep in mind that economists expect 133,000 jobs added, so anything under that number could bring a little bit more worry. One thing to consider though, we had a very large number of jobs added in March, which was actually the second highest pace of job growth all year. A rise in unemployment could make it more likely that the Fed cuts rates. And speaking of the Fed, the CME watch tool shows that we are very unlikely to see a rate cut in our upcoming meeting in May. However, it might not be a long wait till we start getting rate cuts. Our first expected rate cut is in June, with the most likely scenario being 0.25 cut at a 60% likelihood. And going to the July meeting, we have a good likelihood of 2 cuts by that point. That being the most likely scenario, 1 cut being the next most likely scenario. And going to the end of the year, we're still expecting, as the most likely scenario, 3 rate cuts. Next highest scenario, 4 rate cuts. And if we don't get either of those, we're likely to get 2 cuts. The point is, expect cuts in upcoming meetings, but not in our upcoming one in May. Now, I do want to go over some Bitcoin news. Lately, spot Bitcoin ETFs have been seeing some nice inflows. BlackRock yesterday saw its second largest day of inflow on record. However, that came on a day where most funds saw outflows. IBIT pulled the slack and still brought in overall a net inflow of 590 million thanks to their nearly $1 billion of inflows. IBIT is now at 51% of the total spot Bitcoin ETF market share, with $54 billion in assets under management. And here's the list here. You can see that Grayscale has less and less of an impact. Remember last year when we saw these spot ETFs and people were so worried about Grayscale, just the constant outflows? Well, that's not as much of a concern, but they still do have quite a sizable amount of Bitcoin in their holdings, 16% of market share. But you know, that's a positive, seeing that Grayscale has less and less of the overall Bitcoin holdings. This fund has been known for outflows. This fund existed before the spot ETFs, and a lot of it I'd basically chalk up to clients either taking profits or moving to other funds with better expense ratios. But yeah, as said here by Ryan Lee, chief analyst at BitGet, ETF inflows in corporate buying have been significant for Bitcoin's recovery above 94,000 as retail investor interests continue to lag. Another move could be brewing. And ETF inflows topped 3 billion last week, which was the highest since November. Now, speaking of Bitcoin, we are still holding well above our 50 and our 200 MA. If we can keep this up, the golden cross is coming. We are getting closer and closer. We have both indicators pointing to the sky. We have Bitcoin finding resistance right here at this roughly 95.5 area. If we can't break over this zone, we're likely to head back towards 92 to test. If we can break this zone, we're likely to head to 98.4, 98.5. So keep an eye on this zone. I want to see a break over 95.5. We kind of just try to come up and then just get rejected back down. Here's on the 4 hour. One negative that I do want to point out is we do have some bearish divergence. The RSI is continuing to cool off while the price has been mostly rising. I also want to show you the 50 and the 200 EMA cross. I haven't really showed you guys this much lately, but here's something interesting. We did not get a death cross there. We got really close and then the market just picked it right back up. It's almost like the market didn't want that death cross to print. And we've actually seen that a few times before. While the 50 and the 200 MA were posting a death cross back here during that Mt. Gox fear, the 50 and 200 EMA did not post one. It got very close, just like back here, and then it basically shot up. We did get a brief death cross back in 2023. However, almost right after we got that golden cross back, and Bitcoin absolutely rallied. And here's what's interesting. Sometimes bearish signals can mark the bottom or give you a false read. And we have seen that multiple times for Bitcoin. I've showed you guys this, that every time we got a death cross on the 50 and 200, it basically marked within days of the bottom. Same with recently. When we dropped all the way down to 75,000, we saw a death cross a few days before that point. So that brought a little more fear. However, we bottomed out and have rallied nicely. We've gained about 20,000 since that death cross, which is a bearish sign, a bearish signal. However, that basically marked the bottom, as it has multiple times this cycle. We saw that again during the Mt. Gox fear. Bitcoin dropped all the way to 49K, posted a death cross shortly after, and then we didn't see those prices again. We actually more than doubled them shortly after. Again, we saw a death cross back here in September 2023, very early in the cycle. However, this was a fantastic time to load up. In my opinion, you can't let these indicators get to your head. If you love Bitcoin for the long term, you take advantage when it's beaten down. You take advantage when there's fear. Because before you know it, suddenly things become a little bit exciting again, a little bit euphoric again. Suddenly there's more optimism. But let me know how you guys are feeling about Bitcoin lately. It's definitely nice seeing some more good inflows. Keep an eye out for GDP, PCE, jobs data. It's going to be a very busy week. We of course also have earnings for a lot of the mega caps. Thanks as always for watching, guys, and I'll see you on the next one.